Just one moment. All right, so welcome to our webinar on understanding the opportunities in ESG, that's environmental, social responsibility, and corporate governance, and sustainable investing with our friends and experts from SEI. We have three people here from SEI. Our regional director, Clark Schweitzer, is joining us, and then we have our two panelists, really the speakers for today's session, Jay Womack and Jana Holt. And I want to take a moment to just share a little bit about their background before we get started with the slide presentation. And again, feel free to put questions in the Q&A box, and then I will try to find appropriate times for them to answer those questions. So starting with Jana Holt, Global Director and Global Director of Sustainable Investing Solutions with the Investment Management Unit at SEI. So she has been with SEI for a short period of time, but prior to that was Vice President in Morgan Stanley's Global Sustainable Finance Group, where she is quite well known for her thought leadership and the capacity to build firm-wide initiatives for the Morgan Stanley Institute for Sustainable Investing. So this is really her area of expertise. And she was also a client director with the Context Group as Sustainability Strategy and Communications Consultancy. She's got a master's of business administration from Duke, as well as a master's in environmental management from Duke, bachelor's from Princeton, and brings a lot of expertise in this sustainable investing area. And Jay Womack, Director of Investment Products and Services with the Independent Advisor Solutions Division at SEI. So he serves as the Director of Investment Products and Services for their Independent Advisor Solutions, and he's responsible for defining and implementing investment solution strategies. He's the one that we are going to when we want to hear more about new strategies, especially around ESG. And he contributes to a blog that they do that goes out to many of us in the industry. So he's been with SEI since 2018. And previously he was the head of investment strategy and chief administrative officer for Capital Preferences, where he was handling day-to-day operations and the development of quantitative methods that were integrating behavioral finance with investment strategy and financial planning, which is really cool and certainly an area we're very interested in. He's got a master's of business administration, an MBA as well from the Wharton School, and a bachelor's from the University of Southern California. I won't hold that against you as a Stanford graduate, but I'm happy to have you both here today. And at this point, I will let the two of you take over the presentation, and then I'll have a little bit to say at the very end.
Sure. And thank you, Lisa, for that generous welcome. Thank you for having us today. It's always a pleasure when we have the opportunity to work with you. And we're very pleased that you've given us this opportunity to really talk about sustainable investing, but in the context of personalization with your clients. I'm definitely pleased to be speaking with Jana, who, by way of background, went to what I would describe as kind of the West Point of sustainable investing at Duke with the Nicholas School. So she is absolutely a thought leader, really dynamic leader at SEI. So I'm pleased to be here with her. You heard a little bit about us. We're going to talk about sustainable investing and really approach it from the standpoint of basics. And the goal there is to help lay the groundwork or the understanding around what sustainable investing is. There are a lot of terms that are used in the industry: SRI, ESG, impact investing. Jana has spent an incredible amount of time really organizing our position and the language that we use here at SEI. So we're going to communicate some of that to you. And then we're going to talk about how sustainable investing services in the context of investment solutions. And we'll talk specifically about what we think the future of sustainable investing is. With that, I'll give a little bit of background on SEI, just so you know who we are as a firm. When you think about who we are, we're 3,800 employees strong globally, all working virtually right now, with the exception of some employees who are considered part of critical infrastructure because they support global banking institutions. Collectively, we've got about 330 billion in assets under management, 755 billion in assets under administration. We've got about 69.5 billion in assets under management in the advisor market unit, or independent advisor solutions by SEI, as Lisa alluded to earlier, the unit that we're part of. And we support 7,600 advisors like Lisa who are conscientious about their clients, helping them to realize and achieve their financial goals over time. And so we outline that because we come to work every day really with our clients in mind. Our clients are each of you that work with advisors like Lisa, and Lisa, who's really great and very engaged when it comes to the things that we're working on. This is a question really to prompt some thinking and hopefully food for thought as we go through the discussion overall today. And that question is the following: is expressing your personal views using your investments important to you? And that's relevant because when you look at the evolution of sustainable investing, what you're seeing today is really the result of years, candidly, of individuals and institutions who are taking their investments and their values and bringing them together in alignment in terms of how they invest. At SEI, we believe that investing is personal. So when you think about sustainable investing, when you think about aligning your investments with your personal values, that's fundamentally what this means. Investing is very personal. We all have our goals. We all have the things that we want to try to achieve with the wealth that we accumulate, and where we can align those financial objectives with our personal values and objectives as it relates to positive impact on society and the environment at large. It's a fantastic thing. We'll talk a little bit about how you can do that with some of the types of solutions that are out there today, but more importantly, what we're pretty excited about when you think about where we think the future of investing is headed, in particular, given this core belief that investing is truly personal. With that, I'm going to hand it over to Jana Holt to take us through Sustainable Investing 101. And we'll talk a little bit about the groundwork for this idea that personalization through individual stock ownership implemented through sustainable investing is really the wave of the future. So with that, Jana, I'll hand it over to you. I'll keep control of the mouse, so if you just direct me as you want me to advance slides, that would be fantastic.
Great. Thank you so much, Jay. And thank you, Lisa, for both your generous introduction and also for having us here today. I really personally enjoy having opportunities to talk with our clients and with their clients about some of the things that we're doing, as well as, hear questions directly from folks about kind of what they want to see and where their minds are as we think about sustainable investing. So as Jay mentioned, sustainable investing is not necessarily new, but it has really grown and changed in recent years. So SEI has been involved in the sustainable investing landscape for about 20 years, and it's actually, I think, closer to 25 years at this point, which really began working hand in hand with many of our large institutional clients to help them align their investment portfolios with their values and their missions as an organization. And that has really grown across all of SEI and helped us advance our capabilities to bring sustainable investing solutions to all of the different types of clients that we serve. Our approach is really grounded in SEI's focus on providing our clients with access to leading investment managers. As such, we've developed a proprietary approach to integrating sustainability into our manager research so that we're not just looking at sub-advisors and managers from a financial lens, but we're also bringing sustainability into that due diligence and that process. We've developed a dedicated research team within manager research and are developing dedicated resources within each of the markets that we serve to support sustainable investing. As we mentioned, our history of sustainable investing goes back over 20 years at this point. Today, we have about 22.5 billion in assets that incorporate sustainability considerations through either investment screening or ESG integration. That's on the separate managed account side, as well as in some of our funds and other strategies. We do all of this guided by what we consider to be global best practices of the UN Principles for Responsible Investing. We're a signatory to the UN PRI. We report on our progress every year and really kind of use the framework that PRI provides us and the rest of the industry as a way to think about our strategy and the direction that we're taking. And then we reinforce that through our environmental, social, and governance statement, which I'd invite anyone who's interested in reading more about to go onto our website and see kind of what our corporate values mean to us as an organization and how we embed corporate sustainability into the way that we operate and do business. So moving on to the next slide, there's a lot of jargon in this space. You heard Jay reference some of the, what I like to call the alphabet soup of acronyms in this world: ESG, SRI, TCFD, SDGs, lots of different terms. So we thought it would be helpful to start by using some of the language that we use at SEI when we talk about sustainable investing. And sustainable investing is really that umbrella term to describe the continuum of different approaches that an investor might take to personalize their investments and their portfolio to reflect their personal goals, objectives, and values. So on the left-hand side here, we have exclusionary investment strategies. This is kind of sustainable investing 1.0. This is where the industry really started about 20, 25 years ago in thinking about excluding certain sectors, companies, or business practices based on specific criteria that aren't well aligned with an investor's values. So some common screens you might see people wanting to include would be avoiding investments in tobacco companies or the fossil fuel industry. There's also a broad range of criteria that help investors align their investments to faith-based beliefs. So Catholic values funds or Sharia investment strategies. So you might hear people talk about negative screening, exclusionary screening, divestment, SRI. That all kind of flows up into what we talk about as exclusionary investments. In the middle here, you have ESG integration, which is really about using non-financial data and information from companies alongside financial information as part of the investment analysis. So trying to identify companies that may be doing positive things from an environmental, social, or governance standpoint, and bringing that information into your investment process to help you pick stocks that you think either might deliver competitive returns over the long run or help to manage risk. And then on the right-hand side, you have impact investing, which is really about targeting specific themes or outcomes that you'd like to see from a social or environmental perspective alongside your financial returns. So you might hear people talk about thematic investing, community investments. You might see products that are focused on renewable energy or clean water. Those are the kinds of things that would fall into an impact investment strategy. And so moving to the next slide, Jay, we get a lot of questions about kind of how much sustainable investing is there actually out there? Is this something that just a small handful of investors are doing, or is this something that is becoming more mainstream? And what we see is that in the US, about 1/3 of assets under professional management incorporate sustainability into the overall approach that the investor takes, both with asset owners and asset managers, in thinking about whether or not there are certain values that you want to align your portfolio with. I really like this chart on the right because it just shows the way that this has kind of been trucking along for the last 25 years, but it's really in the last 5, 6, 7, 8 years that sustainable investments have started to accelerate. And a lot of that has to do with the availability of more information and more data from companies. So, whether it's companies that you read about online or that you might work for or that you see in their advertising, these sustainability messages and information are becoming much more prevalent. And that goes for the data that helps investors incorporate this information into the investment process. And so what we've seen is that on average, sustainably invested assets have grown more than 14% per year since 1995. And then sort of the acceleration that's happened since 2012 has really been a kind of swift change in how this conversation looks. On the next slide, this is a little bit of a closer look at sustainable investment products. So mutual funds and ETFs in this chart that have a dedicated sustainable investment objective. And what we see is that that sort of uptick in interest and kind of new assets flowing into those funds has really accelerated, particularly in the last couple of years. So it sort of makes sense if you think about the last chart, where investors were starting to think about these ideas and the way that they're developing an investment policy or an investment approach. And then in the last couple of years, they've really started to put dollars behind sustainable investment strategies as the availability of those types of products has really become more widespread for investors. And so one of the most common questions I get from folks is, well, what about my financial goals? Does aligning my portfolio with my personal values or goals around sustainability mean that I have to make a trade-off in my investments? And the short answer to that is no. So on the next slide, this is a couple of different studies that I like that really show not just, recent performance, but also longer term performance. And what we see is that studies have shown that sustainable investments may reduce risk and perform on par with traditional investments. So it really comes down to selecting the right investments for your portfolio and doing that analysis, but there is no inherent trade-off between a sustainable fund and its traditional counterpart. So more than 90% of more than 2,000 studies found that there was either a neutral or positive relationship between ESG and financial performance. A study looking at European sustainable funds found that over a 10-year period, almost 60% of them outperformed their traditional counterpart. And then looking more closely at 2020, which we all know was a bit of an anomaly on many fronts, 75% of sustainable funds performed in the top half of their peer group, and 42% performed in the top quartile, so in the top 25% of funds based on performance. And so, that leads us to kind of ask, well, what does sustainable investing actually look like? How are clients and investors starting to think about personalizing their approach from a sustainability lens? So you guys are some of the first to see this data that comes from a survey we conducted this fall of advisors. And we had about 800 advisors respond to that survey to tell us a little bit more about what kinds of sustainable investing approaches are they interested in working with their clients to integrate, and then what issues are they most interested in seeing solutions focused on. So what we saw was that ESG integration approach really taking up about half of where the interest from advisors was. So going back to this idea of incorporating environmental, social, or governance factors into your investment analysis. But we do see about half of the field being also interested in exclusionary or impact investing approaches. And then when we look at some of the more detailed themes or topics that advisors see their clients wanting to address through their portfolios, you see at the top a lot of focus on environmental solutions. So renewable energy, addressing climate change, protecting natural resources. These may not surprise you that these net out of the top, but we also continue to see interest in things like community development, diversity, and other areas of sustainability interest. So I'm going to pause there and pass it back to Jay to talk a little bit about how we're working with clients and then their clients ultimately to start to personalize portfolios based on some of these sustainability objectives.
Hey, thank you for that, Jana, and thank you for that background. And, I appreciate just the context, in particular, when you think about what advisors are expressing as areas of focus, because they're hearing directly from clients when they're sharing their views. And so when you take what we just talked about with respect to the changes in sustainable investing, I'd like to prompt each of you with the question, what personal views would you like to express in your portfolio? I think in the data that Jana showed, when you look at the growth in assets going into the sustainable investment strategies of different types, and you look at the acceleration in the past couple of years, we can think about different topics that have come up over time where we see fundamentally that the activity by individual and institutional investors engaging with companies is changing behavior across a number of dimensions. And so it's possible to have your investments align with your values and drive change. And so, given this growth, what personal views would you like to express in your portfolio? I'll leave that there as just something to ponder, because when you think about the future of sustainable investing, right, the present is accelerating at a rapid pace. We're seeing fundamental change in terms of how companies engage with and orient themselves with their shareholders and with society more broadly, where they're rethinking what it means to be, a corporate citizen, what sustainability can mean. How do you begin to express some of your views, some of the things that really matter to you in your portfolio? Before getting to the future, I'm going to talk a little bit about SEI and our continuous evolution. And really, this is kind of backward looking, but I think is relevant because it's what's there today. And I think it's very consistent with the type of growth that we've seen in our approach to continuous evolution. So there are a handful of strategies that we offer that are specifically focused on ESG. And one place where we see a lot of adoption from clients who are really looking for ways to connect their investment dollars with the causes that they care about is through the use of some of our ESG ETF strategies, where taking an asset allocation that's consistent with achieving particular goals, so growth goals, stability goals, or income goals, you actually have the opportunity to select from a set of ETFs that we've researched to identify their relative liquidity and their consistency with the objectives that they've outlined. Again, as an investment advisor concerned about making sure that the instruments that we use on behalf of our advisors in their client portfolios are consistent with a degree of quality and liquidity. We've selected these ETFs and made them available for substitution. So when you think about your portfolio, advisors have the ability to take out traditional S&P 500 exposure, for example, and use the MSCI KLD 400 social ETF, just again, as an example of a way that you can use substitution. And that substitution is available across a number of asset classes. As you've seen the growth that Jana alluded to earlier in investments in different funds that are focused on sustainable investing, the universe of what we would call the investable ETFs or investable mutual funds has also grown. And so that's something that we're excited about as a firm, that I'm particularly excited about, because it means the tools available at our disposal to deliver solutions along that continuum that Jana alluded to earlier are only growing. And when we think about where we're headed in the future, what we've got today and the types of capabilities that we've had for some time now, it all very much aligns with that continuum of sustainable investing that Jana spoke about earlier. Apart from these strategies, we also have some solutions that are individual manager solutions, where those are managers that are looking at the ESG characteristics of the companies that they're investing in. They're taking a look at how those companies impact the environment. They're looking at their engagement in social issues. They're looking at their governance profile, and they're making positive decisions. They're making the choice to tilt the portfolio toward particular attributes that are favorable from an ESG perspective. So going back to the continuum, exclusionary screening, ESG investing, and impact investing, this represents that middle part, the ESG component, where what we're trying to do, what those managers are trying to do, is direct capital towards companies that are actually making a change and incremental improvement. One of the other solutions that we've launched recently that in and of themselves represent a building block towards this future state that we've talked about are our SEI systematic core strategies. And these can be critical building blocks to portfolios that are personalized and allow you as an individual investor to take your values, those things that are important to you, and to overlay them onto, I'll call it a building block solution. So let's just talk about what these are, what their purpose is, and then we'll talk about how they can be used to express your values from an investment perspective, if this is the right investment for you. The systematic US large cap core strategy is a portfolio or a strategy that attempts to deliver performance that is consistent with something like a Russell 1000 benchmark. We use a lot of terms about benchmarks, and we talk about the Russell 1000 and the S&P 500, but very simply, when you think about the stock market, large companies tend to be the dominant performers in the stock market on any given day. That's where most of the market capitalization, if you will, of stocks in the US market preside from a market cap perspective. They're large companies. So when you think about the systematic US large cap core strategy, what we're attempting to do is provide basic exposure to that segment of the equity market. When you think about an all cap strategy, there are large companies and there are small companies. And so whereas the Russell 1000 index is an index or a benchmark, if you will, that tracks the performance of relatively larger companies, the Russell 3000 actually combines exposure to large companies and small companies. So if you want to think about investing in kind of the total stock market with opportunity on both the smaller cap side, where companies can tend to be higher growth, or the larger cap side, where they tend to be kind of your classic blue chip, maybe dividend paying stocks, or maybe they're growth stocks like Amazon. The all cap core strategy, the systematic US all cap core, gives you exposure to that broader representation of securities. When you think about investing outside of the US, right? When you think about a globally diversified equity portfolio, we call it the International Developed Core. There's a benchmark called the MSCI EAFE Index that represents non-US developed stock markets broadly. It's a market cap weighted index. It represents investments in Europe, Australasia, and the Far East, quote unquote. So it's major countries, G20 countries outside of the US. And again, they've got similar stratification, if you will, or differences in size, both large and small in terms of companies. Companies that are in this index tend to be larger. So if you're thinking about how you get exposure to global stock markets, these are building blocks that could be used if they're appropriate for your portfolio. And the way that we design these is the following. We take a small sample of securities from each of these markets, and we try to select those in such a way that they represent the performance of the broader benchmark as closely as possible, but without having to actually buy the benchmark. So if we take the Russell 1000 as an example, quite literally, there are about 1,000 companies in the Russell 1000. If you wanted to try to get exposure to it, it would be very costly to do so. It's very prohibitive. Usually these types of strategies were reserved for very large institutions. Fortunately, with technology and the capabilities that we've brought together at SEI, we have the ability to deliver exposure or that representation of securities with a much smaller number of holdings, which makes these more accessible for those who may be interested in using them as a building block in your portfolio. I give you that background because there's some very important things here to consider when you think about what it means to hold securities directly. There's some benefits to that, a couple of which we'll talk about, others of which may not be as obvious. So first and foremost, it's transparency. When you think about an ETF or an index mutual fund, it's a prepackaged pool of underlying securities. You don't actually have the ability to influence what's in that pool or out of that pool. It's kind of a take it or leave it approach. So these systematic core strategies provide a degree of transparency and control that it does not necessarily exist when it comes to a traditional ETF or index mutual fund. This is a little bit of a technical term. It's called transition management, but very simply, if you've got a security that you're holding that you maybe had passed down to you or that you've held for a very long time, maybe you paid $10 for that security and now it's worth 80. You've got embedded gains in it. If you sell it, you're going to have to pay taxes on that gain. Using these systematic core strategies where you're holding securities directly. Again, if they're the appropriate investment and Lisa assumes that, you know, this is the right holding for you, you have the ability to bring over what we call those low basis positions, or those securities that you've had for a long time that have accumulated gains, and use them as a component part of this particular set of strategies. We have the ability to absorb those without you actually having to sell them, and can still get pretty close to delivering that benchmark-like exposure. So that's a key benefit. If you had to buy an ETF or an index mutual fund, you'd have to sell that position, realize a capital gain, then buy the ETF or mutual fund. And sometimes that can be the right thing to do depending on the taxability of your account or other factors that may come into play from a financial planning perspective. But where it's appropriate to hold it, this is a potential solution that allows you to do that. When you think about tax efficiency, ETFs in particular are a very tax efficient vehicle, as gains are realized inside of an ETF that does not trigger a capital gain distribution for you. Mutual funds tend to have cap gain distributions associated with turnover inside of the mutual fund. One of the big drawbacks, though, is that if there are losses embedded in particular positions, there's no real way to take advantage of that. Through the practice of active tax loss harvesting, i.e. Selling positions that are at a loss to realize that loss, you actually have the ability to manage your cap gains profile over time. And so that's one of the big benefits of holding individual securities. If you look at the S&P 500 last year, over the course of the year, it returned 16%. If you look at the individual securities that were part of the S&P 500 at different points in the year, there's some that lost as much as 60% of their overall value from January 1st to December 31st. There's some that went up over 400%. And so when you think about those that lost value versus those that had appreciation, if you had the ability to harvest losses over time, you can actually manage your cap gains profile in your broader portfolio. And that can be a big benefit, again, if it's the right solution for you in a taxable account. I won't talk much about charitable giving. You have the ability using these securities if you've got causes that are important to you and you've got charitable inclination to actually take high basis or low basis, high cap gain embedded holdings and transfer them into solutions that can be right for supporting charitable giving. But the thing we're here to talk about today that I think I'm most excited about, apart from the control and the flexibility and a lot of the tax efficiency that you get in these, is sustainable investing. There is a plethora of ETFs out there now that are focused on different causes or issues that are important to different investors. And, you know, that's been great to see. I can remember when I started my investment career after business school at Wharton, it was around 2010. The firm that I worked with launched an ESG focused strategy, and there was some interest from institutional investors, but not a lot. And there were a whole lot of really dedicated people, many like Jana, who were engaged in sustainable investing or different causes that were of concern from an ESG perspective. And it was always sort of waiting for the assets to continue to accumulate, not just from institutions, but also high net worth and ultra high net worth investors and retail investors more broadly. Where we are today stands in stark contrast to where we were then. So there are a lot more options available. There are a lot more instruments tracking different causes. But those instruments, those ETFs and mutual funds may not totally align with the things that are important to you. At SEI, we're really excited about personalization. I'm personally excited about personalization. When you think about strategies that give you the ability to hold individual securities, in this case, it happens to be the systematic core strategies, but if you have the ability to hold individual securities and you're working with an advisor that has the ability to bring through partnership technology to bear to customize these solutions, you actually will have the ability to express your values very directly in those holdings. What does that mean? How does that happen today? When you look at the systematic core strategies or other strategies that are equity strategies at SEI, and this capability is available in different places. Jana talked about it. Exclusionary screening is something that you're able to do. So if you've got a core holding, a systematic core strategy, And for you, exposure to gambling is something that you are not willing to have in your portfolio, or firearms, or gambling and firearms. You have the ability to select from this list of screens designed by SEI in collaboration with outside partners. You have the ability to screen particular securities from your portfolio. We call that exclusionary screening, which means you're taking stocks that are in a strategy and you're removing them. When you think about that, there's a lot of good that comes from that. There are strong signals that are sent when investors, both individual investors and institutional investors, take their resources, their capital, and allocate it in a way that garners the attention of corporate boards and corporate executives globally, quite frankly, and in the US in particular. But you don't have the ability to actually take the money that you've got and use it positively. You don't have the ability to focus your investments in those firms that are really leading the charge, if you will, when it comes to ESG principles. That's the future. When we think about where we're trying to go with the systematic core strategies, and just more generally, the intersection of technology and the investment solutions that we offer in these types of strategies where you actually hold the individual underlying securities, we are really focused on personalization. So imagine for a moment, if you will, you've got assets, an inheritance maybe that's come in. And you've got some low basis stock that's in there. Maybe there's Exxon, and that's not something that really comports with your personal values. And you have the ability to totally personalize a strategy around the things that are important to you. Hunger globally is a key issue of importance to you. Fairness in terms of income and labor force rights at different companies are important to you. Water quality is important to you. Climate action is important to you. Social injustice, reduction of inequalities is important to you. You have the ability, or will have the ability, to come in, have that conversation with your advisor, to communicate those preferences to us in particular at SEI, and to have a portfolio delivered to you that expresses those particular preferences. This is state of the art. This is where the future will be more broadly. There are no firms really that offer this today to investors at scale. But I'm proud to report that our team here at SEI, Jana, myself, and a handful of other dedicated professionals are working to make this a reality, because as I said earlier, and we fundamentally believe at SEI, investing is personal. And if we, working with Lisa and other advisors like her, can give investors the ability to really connect their investments with their values, so that they can use their wealth in very positive ways to influence change in society or change from an environmental perspective, that's something that we are dedicated to trying to do. And so with that, I'd like to hand it back over to Lisa. I know there's some things that she wanted to talk about, and I'm sure there are questions. I've actually got one for Jana. So Lisa, handing it back over to you, and happy to move forward in whatever way you see fit.
Absolutely, Jay and Jana, thank you so much for that presentation. Yeah, I want to give a little more context as far as what we've been doing at Omega, what is available in addition to what Jay has shared here. So we've actually had socially responsible investing, ESG investing, in at least some of our clients' portfolios going back to, actually, this is going to really date me, honestly, the mid-90s. Because of my affiliation earlier on when I started my career at Calvert Securities, related to Calvert Group, which is has been a thought leader and a leader in this area early on. So we had put together some very simple portfolios for clients over the years to try to align better with their values, because obviously our financial life planning approach is all about aligning our financial plans with our values and our vision for the future. And by the way, the reason we're having this webinar today is because of the client survey we recently conducted. This was the top topic that people wanted to learn more about. So that's why we're recording it, and we'll be sharing it with more of our clients. Over the years, as we've had it available through SEI, we have added some other options, and we have some options outside of the SEI universe. There are for clients with bigger portfolios and holding individual accounts, there are money managers that do follow these socially responsible or ESG principles already available. We can certainly screen out, and that's what Jay was talking about right now. We can definitely screen out if you're holding individual securities, or if you decide to participate in the systematic core program. We can get much more laser focused on what we exclude. But what we have done over the last year or so is invite many of our clients, at least with their IRA and other retirement accounts, to incorporate the ESG exchange traded fund strategies. And the reason we started there is because there was no tax impact to make that change. And I'm pleased to report that the vast majority of clients that we invited to consider that strategy went ahead and did that last year. Now we, I guess, lucked out a little bit on the political environment, because certainly we're now in a situation with the current administration where I think we're going to see support for a lot of the policies that go into ESG investments. And that was perhaps a little luck, but what we know is that many of our clients want to align their values with their investments. And finally, a couple of the other places that we can help align our clients' investments with their values are some things called community investment notes. They're basically like non-FDIC insured CDs. The trade-off is that you make a little less interest on your money. It's for a set period of time, but your money is going out into the community through community investment banks for a lot of the same causes that we have been talking about here. And that's something we have been utilizing, and we do actually hold those at SEI. In addition, there are other opportunities through charitable giving, setting up donor advised funds through Impact Assets up in Bethesda, Maryland, to align how your money that you have, like that Exxon stock that Jay was talking about, you put it into the donor advised fund, you take a tax deduction, you don't have to realize the gain, you get a tax deduction for making that donation into your fund that you've set up and name however you want, and the underlying investments can be impact investments or ESG investments. So it's another, yet again, aligning of values and your money. So there's we have a couple of other options. Those are just some of the I think more well-used options that we offer with our clients, and we're always happy to talk with you individually about that. So I'm just curious if anybody's got any questions for us, for Jay or Jana, about ESG or about the future of where things are going with investing. And thank you for covering the one that I always get when we're meeting with clients about, am I giving up returns? Because that's always a concern, for clients. Am I having to give up something? And I think it's important to note that Europe is way ahead of us on this compared to in the United States around ESG investment strategies. So any questions or thoughts that people have?
Lisa, there was, I don't know if there are any questions coming in, but there's one thing that may spark some discussion here that Jana alluded to earlier. And so Jana, I'll toss it over to you, because there was an important point in this is something we're excited about. There's a lot that's going on from an engagement perspective, and Jana alluded to it in one of her slides, where ESG integration, as we call it, is becoming more mainstream. Half of advisors really want to see ESG kind of integrated more broadly into the things that are going on. So I think it'd be great to talk a little bit about what we're doing from an engagement perspective, because that is one of the active ways that you and your clients, candidly, in working with us, are having impact overall. So Jana, if you want to talk a little bit about the engagement strategy that you rolled out I think that'd be fantastic because it's just one of the many dimensions of how sustainable investing and ESG are playing out and really becoming mainstream.
That's a great question and point that you bring up, Jay. So, in this conversation, we've sort of framed up one way that investors think about expressing their values and sending a signal to companies being divestment or excluding certain companies, and the way that those companies see investors moving away from them and see that as a signal about the way that they're managing their organization or the business that they do. Another and potentially even more impactful way that investors are able to influence companies is through this idea of engagement. So at SEI, we talk a lot about investment stewardship, which is really this idea of how do we use our voice as a shareholder to actively and proactively work with the companies that we're invested in to move them in a direction that aligns with what our vision for the future is and thinks about kind of long-term management, because we know that many of our clients are long-term investors saving for significant life goals like retirement. And so we want to think about how do we use our voice to encourage companies to think about long-term management, not just the next quarter or the next year, and be thinking about how sustainability, megatrends, and issues like climate change or the way that the nature of work is changing both as a result of technology and the current pandemic that we're in. How are companies positioning themselves to both manage risks associated with those issues, but also take advantage of some of the really significant business opportunities that those trends might provide? So we recently rolled out a global approach to investment stewardship, where we're working with a collaborative engagement partner to essentially bring SEI and other large asset managers to the table with companies for productive and proactive dialogue about how they're managing some of those issues. So there's a few things that we're focused on. One of those is kind of norms and standards. So how do we make sure that the companies we're invested in are addressing challenges or problems that they've had historically related to global issues like labor rights or environmental, spills and compliance issues, those things. How are they remediating those and mitigating them in the future? Then we're also engaging on a number of different sort of more focused sustainability themes like climate change and how companies are kind of managing their business in preparation for a transition to a lower carbon economy. How are we thinking about, like I said, the future of work and the way that the workforce may look very different? There'll be new jobs available, and how do we train people whose jobs may be changing for some of those new jobs of the future and for the direction that the workplace is taking? We're engaging companies about how they're setting up their boards and leadership to position themselves for long-term success. And then we're thinking about other topics like sustainable agriculture. The way that global demand for food looks is very different than it was 15 or 20 years ago as the world kind of globalizes and urbanizes and more people come into middle and high income status, which leads to more demand for certain types of agricultural products. How do we work with companies to make sure that they're planning for those shifts in kind of what the economy will look like in ways that won't result in environmental degradation? So really trying to sort of think holistically about the ways that companies may influence social and environmental change, and then use our voice as a shareholder to encourage those companies to move in a positive direction, and then bring those insights back into thinking about what we know about those companies and our decisions to invest with them. Did that answer your question, Jay?
It does, and I think it's great overall background because it really talks about how active sustainable investing is, and it's not just it's not just an activity where we're allocating money to specific companies, but we're also engaging companies to really drive change because there are a number of issues that are out there. Are there any other questions, Lisa?
Well, yeah, I had maybe one or two that I wanted to run by you real quickly. One of the things that as we've gotten introduced to the systematic core program that you guys have rolled out, one of the things that I've been thinking about that I think investors need to think about is that when you start to, let's say you decide to invest in one of these systematic core strategies, and then you decide to apply some of the screens. Maybe you don't want to have folks that have, any stocks that are in, fossil fuels or, whatever the themes might be. I think what's exciting, but also worth thinking about is that once you as an investor start to apply certain screens or, exclusions, you're becoming a more, a greater partner in the success of your investment strategy. So it's something that people need to understand, that when they're excluding things and eventually when they're picking things, that they're more of a participant directly in what happens with their investment portfolio in the future. Wouldn't you say that's the case?
100%. And I think if you look at trends over time and you look at what's happening across generations, I know a lot of attention is paid to kind of millennials as I'll call it quote unquote trailblazers in this area, Lisa, but as you alluded to earlier, there are leaders like yourself or Gita Ayer at Boston Common Asset Management and others, who've been in this space and who've been driving change for a really long time. And when you think about individual investors who've come along on that journey over time, it is very much taking an active role in driving the strategy, the outcomes in the portfolio. And, that's not an either or proposition, as Jana alluded to earlier, that's not a question of returns alone, but it's also returns on values. And when we think about the systematic core, that investor engagement and active participation, potentially through exclusionary screens, and at some point in the future through positive selection of causes or things that they want to amplify, one of the things that we're excited about is really giving investors transparency and visibility into the outcomes that they're driving. So when we think about that positive tilting and we think about those exclusionary screens, providing reporting around that and around what that means in terms of tangible impact is something that we're exploring and that we intend to deliver on as well, because, we alluded to it earlier, and I'd say it's a core belief when we think about these strategies and what we're trying to achieve. Investing is definitely personal, and I think the engagement with investors in really crafting the strategy that's being executed to help them achieve their long-term financial goals, you're really invested in more ways than just one, and the dollars matter a little bit more, we find.
Well, I think there's going to be some investors who are going to feel like that's a little too much responsibility for me. I'd rather leave it to the professionals. And the good news is that we still have the ESG exchange traded funds and some other directions that people can go with SEI and with us. If you don't want to take on that responsibility, because it's a responsibility when you start to select screens or eventually positively select, you are actually partnering with us and with SEI in the process. And for some clients, it seems to me that's something they would really like. They'd like to have that impact and control. And then there's probably going to be other clients who maybe are a little overwhelmed with that. And the good news is that we've got a solution for you too. The alternative isn't that you've got to be invested in things you don't want to be invested in.
I think go ahead, Jay.
No, you go ahead, Jana.
I was just going to completely agree with you, Lisa. There's no one size fits all approach to sustainable investing. And it doesn't mean that you have to change your entire portfolio. There's really ways to kind of build this into your investment strategy and your approach, and to do it in partnership with your advisor. This isn't something that you're, either kind of out on your own or just following the experts. It's really about a conversation about how to bring what matters to you and what's important to you into that conversation about what your portfolio looks like over the long run.
That's great. Go ahead, Jay.
Well, no, I would just echo that. I think it's about having the right solution that a client's kind of comfortable with, and having a range of options so clients can be as involved as they'd like to in the ultimate portfolio that they are investing in.
Yeah, I mean, I think the good news is that we work with a relatively smaller group of clients, and we have the ability to customize and personalize according to their needs. So it's great to have you here. And I want to just also say to Jana on your efforts, thank you, because the piece that I have felt that was missing is, when we're just excluding things, that's one piece. But when we are also out there actively engaging with companies to help them grow and move forward. I think that's really exciting, and I'm really I'm glad to see that SEI is taking on that effort. Obviously, thanks to you coming on board. So again, thank you to both Jay and to Jana, and as well as support from Clark Schweitzer as well from SEI. Appreciate having all of you here. We hope to be able to send this recording out, and I think we will be able to send the slides out. We'll confirm that as well. And we look forward to talking with you about some of the strategies and how to customize your investment portfolio to fit with your values. So thanks again for being here. Thanks to all of you from SEI, and thanks to my team from Omega as well.
Thank you, Lisa.
Thank you.
Have a great evening.
You as well. Good night, everyone.
Good night.